Okay, so good morning. We are going to start the lecture on taxation today. Um, this is the fourth module of our program, like our syllabus. So let me start directly the taxation lecture. So, as a part of the beginning of the taxation lecture, let me start the history of taxation. Okay. So there is a lot of apprehensions regarding taxations, as well as there is good view about taxation as well as bad view regarding the taxation system. Okay. ഹലോ ക്ലാസ്സിലാണ് ഞാൻ വിളിക്കാം ക്ലാസ്സിൽ ക്ലാസ്സിലാണ് വിളിക്കാം Okay, so as taxation, let me start with the Matthew, the tax collector. So, tax farming, this is what is actually from the very beginning, people used to say that the taxation is actually a sin. There are many people who, economists as well as earlier historians as well as the philosophers, they used to say that we cannot tax people. Okay, taxation is a sin. That means if you collect tax, then you are a sinner. Okay, so this is what is in Matthew, you can see in Bible, right? So for the French, you can see that an important cause of French Revolution itself is tax, contributed to the downfall of Napoleon. So again, you already know that American War of Independence, where you can actually see that the the cornerstone of that particular revolution, or what you call the shift of power, is caused due to taxation and a famous slogan against taxation: "No tax without representation." So this is what is actually the basis of tax. So people are very resistive towards different kinds of taxation. At the same time, there are many people argue for taxation and rational taxation, etc. So in English law, English speaking countries, after the Glorious Revolution, or 1679, 89, revolution, Parliament stripped the king of the right to tax. So now the Parliament can only, after that, the Parliament can only tax, not the king. So the wig and the powder tax is the classic example of all that. So in the United States, as I said, the Boston Tea Party makes is a coffee drinking nation. So tea tax is actually, there are so many issues regarding that. So our constitution specifically states who has the right to tax. Again, in India, if you come to Indian context, our constitution says that who can, what does the state can collect, what does the center can collect, what does the other people, any local bodies can collect, etc. So everything is constitutionally mandated in India. So in that sense, it is actually more or less very kind of a functional base. This taxation is a functional, has a functional base in India. So that GST, the very reason one, that itself is because of the constitutional amendment and all. So if you want to change the tax structure, you have to change the constitution. Then in US again, the whiskey rebellion is another example. I'll come to that. Okay, so there are different principles in that sense. Involved with the taxation, because if you don't have tax, that means there is no income. So if you don't have income, then you cannot have an administrative apparatus working for or against the people. So for or against is actually the perception of who is ruling and who is actually being on the other side. So whatever this is actually the case, taxation is an essential part of any nation or any administered order. or what you call in a very institutional perspective, it is taxation is actually the cornerstone of the building block, or the building block of the institutional mechanism. Okay, so everything requires some sort of an income, as well as it involves a sort of expenditure. Okay, so that is why, there is a lot of economists, in fact, involved in this sort of understanding, and there is a couple of theory, or what you call maxims, involved in collection of tax. So very simple, that Adam Smith, from the book Wealth of Nation onwards, we have this idea, that is, how to collect tax, what would be the rational point of collecting tax, etc. So Adam Smith's maxims of tax is one of the first in that kind, but there are many other early literature also do speak about tax. For example, Kautilyan's Arthashastra, in that textbook, it is very clearly mentioned who can tax, the king's taxation capacity, etc., and where to tax and how to tax, etc. Everything is very detailed mentioned book. So, Ardhashastra, you have this clear mentioning of which commodity has to or taxed, or who has to be taxed, etc. So there is a the books, which is earlier books, also do talk about taxation. But as modern economics comes, or every lectures comes with the a lecture beginning point as wealth of nations. So Adam Smith also brought out certain principles of taxation. Okay. Kautilyan's Arthashastra's principles of taxation is not based on the modern sense. It is also involved. There is a lot of exemption to different kind of people, but that is not the case with the Adam Smith's thing. So that is why we at least start with. Okay, but still we can discuss on Arthashastra's importance later. Okay, I'll do discuss about it. So Smith's maxims of taxation, number one, that is, the subject of every state ought to contribute towards the support of government as nearly as possible in proportion to their respective abilities, that is, in proportion to the revenue which they respectively enjoy under the protection of state. So this is what is actually the first point which Smiths try to articulate, and this is what is called the cornerstone of the ability to pay principle. So this is what first principle which is we actually stick upon, that is the ability principle. So the expense of government to individual of a great nation is like the expense of management to the joint tenants of a great estate, who are all obliged to contribute in proportion to their respective interest in the state. So, ability to principle lies there. Then the second principle is uh, the tax which each individual is bound to pay ought to be certain and not arbitrary. This is what is the second principle. This is one of the principles which is makes uh, the Smithian understanding a very coherent one. Whereas I said earlier, for certain people, in even in Arthashastra, you can see that the certainty principle is certain for certain people only, not all the people. So here, the tax which individual is bound to pay ought to be certain and not arbitrary. Okay, so X has to pay this much amount and Y has to pay that much amount. That kind of an arbitrariness is actually is not a very good principle. This is what is for Smiths. So if you want to have different category, you please do have the category, but within that category you should have a certainty. This is what is actually the principles of certainty. So the time of payment, the manner of payment, the quantity of to be paid, everything ought to be clear and plain to the contributor and to every other person. So this is what is actually the pillar of the certainty principle. So where it is otherwise, every person subject to the tax is put more or less in the power of the tax gatherer, who can either aggravate the tax upon any obnoxious contributor, or exhort by the terror of such aggravation some presence or perquisite to himself. So this is what is his opinion regarding this particular concept of certainty. So this is very very important aspect as far as the tax understanding is concerned. It doesn't mean that this is the holiest principle. So there are many people who had disputed as well as refuted this principle. Okay, we will come to that later. So the third principle of Smith's maxim is every tax ought to be levied at the time or in a manner or in the manner in which it is most likely to be convenient for the contributor to pay. So, for example, if you are a farmer, you cannot ask gold to be supplied by a farmer. So this is what is called the convenience. So a farmer who is having a produce which is farm produce. Same the case with the other person. You cannot actually ask somebody who has to pay something which he cannot immediately produce. So the contributor's convenience is also very important. Not only the person who is assigns or kind of impose tax decides everything, but also the person who supposed to remit has to have a say in this particular give and take policy, that is tax. Okay, so that is why the contributor's convenience is the most important thing. This is what is called the third tenet of the or the maxim of taxation according to Adam Smith. A tax upon the rent of land or of a house payable at the same term at which such rents are usually paid is levied at the time when it is most for the likely to be convenient for the contributor to pay, or when he is most likely to have the wherewithal to pay taxes upon such consumable goods are articles of luxury are all finally paid by the consumer, and generally in a manner that is very convenient for him. This is what is the statement we can see in the Earth of Nation. Okay, so this is the baseline of actually the convenience principle. Now, the fourth maxim which Smith would like to, propose was every tax ought to be so contrived as both to take out and to keep out of the pocket of the people as little as possible, over and above what is bring into public treasury of the state. So the not only the ability to make principle, but also the tax should be minimum. This is what is the another statement which Smith tried to put forth. That means you can't simply charge as much money you want. So you have to also consider, take into consideration of the payer's pocket. Okay, so based on that only you have to. Then only you can say that you can rationalize taxation. So there are other. These are the fundamental tenets of these four tenets are the fundamental tenets of Smith's maxims, or we call Smith's maxims of tax. Okay, canons of tax. There are many word used these days. So over and above, there are other points also Smith mentioned. For example, an injudicious tax offers a great temptation to smuggling, but the penalty of smuggling must rise in proportion to the temptation. So this is what is called. So you have to actually, whatever taxation you impose, people have a tendency of evading that tax. Okay. Then, in order to actually curtail the tendency, what you have to do is actually the penalty of such evasion would be very high. If that is there, that is as equivalent as the temptation of evasion. So this is very important as far as nowadays nobody is actually care about this thing, but this is a very very important principle if you want to. So principle which we need to apply if you want to basically impose tax or get the tax income. So if you want to be so strong, then you have to apply this kind of principle. So this is why if you want to have income, then you cannot simply forego income, but what you have to do is actually ensure that you are getting this. So for that you need this sort of a principle, that is an injudicious tax offers a great temptation to smuggling, but the penalties of smuggling must rise in proportion to the temptation. So the law, contrary to all the principles of justice, first create the temptation and then punishes those who yield it. And it commonly enhances the punishment too, in proportion to the very circumstance which out certainly to alleviate it, the temptation to commit the crime. So when you have this sort of a high check and balance, that is, if you basically default, then you have to pay a huge amount. Then people have less likely to, or their likelihood of default would be less or the least. So this is what is the principle of Smith, which is normally called the canons of taxation, or the Smith's maxims of taxation, etc. So let us talk about a little bit features of the same tax. Smith's tax philosophy is equality, certainty, convenience of payment, economy of collection. So these four principles we have already mentioned. So, on the contrary, modern tax philosophies is distribution of tax burden fair. Equality, it is not equality. We are talking about fairness. Okay. So, if there are two different people, then fairness is different. Okay. Equality is different. We have already seen all these differences, or we'll see in the coming lectures also. So, certainty is, instead of certainty, are taxes designed to minimize frictions or distortions? So instead of certainty, what modern tax philosophy rely on is whether the frictions or distortion is minimal. Okay. So the third point, instead of convenience of payment, is the system understandable to the payers. So this is the third one. Whether the people have a sort of conviction that why they are paying, etc. So first of all, that is why I would like to always say that whether we need to really have a government or not is the first question which we need to move to. If you don't feel that you need a government, then there is no question or convincing point to say that the tax, any rate of tax is actually justifiable or rational for people, rationalizes people's interest, because for them the very existence of the government itself is, or the very existence of the government is a sham. So, if people have such mentality, then it is meaningless to talk about what rate of tax we have to impose, etc. So, that is why we need to begin with this simple question, that whether we need really a government. If you need government, then government really need income. So, in order to manage, organize, etc. So if that is the case, if 2 points were convinced, then, or if you are convinced with these two points, then what rate of tax makes sense? So this is what is actually the third one. These system understandable to payers. So once you are okay with this thing, then we can talk about the rate and different aspect of it. And the fourth one in the Smith's philosophy is economy of collection. Is the tax system operated as low a cost of as possible? So whether you are having a tax collective mechanism which is uh, not costless, basically is cost efficient. Okay. So this is what is called the economy of collection. Basically all the four principles of Smith is having a resonant effect in the modern tax philosophy. So this is why the equality principle, though the fairness principle is being applied, but the element of equality is what is actually the cornerstone of the element of fairness in that sense. So certainty, convenience, and the economy of collection, etc., are all uh, applied in different format in the modern philosophy of tax. So therefore, whatever the Smith's principles of tax is definitely have a sort of a positive impact in the modern understanding and the imposition of tax and collection of tax. So this is about the first part of the history of tax and the principles of tax. Okay, what do we tax? Now, this is the question. Now, we know that actually there are different kinds of tax. One is actually income tax. The other one is that is in a Indian context. You say that the direct and indirect. You have two type of tax. One tax is direct tax. The other tax is an indirect tax. A direct tax is a tax which is actually directly tax from your income. All right, direct. It is directly taxed. An indirect tax is not a tax which is actually directly from income, but whatever commodity which you purchase or whatever things transaction you do, you pay some portion of tax, some portion of your income as tax. So this is what is called the indirect tax. So broadly, this is a nice classification to understand, make people understand very quickly. So direct taxes are there, indirect taxes are there. Now, direct taxes are often comes in the form of income, that is wages, interest, and the dividends. Then you also have consumption tax like sales, excise tax, etc. Now we call it as value added tax. Okay, then you also have permanent wealth like situation wealth taxes like property tax, personal and real property, then capital gains, inheritance, etc. So these are the things which normally we tax. So most of the people has any of this thing, okay, or they have to pay this sort of thing. So okay, like wages and interest, dividend, etc. If you have income, then you have to pay for it. Again, if you have the other portion of the same, that is called the wealth, the fixed assets like property, capital gain, inheritance, etc., then you also has to pay tax for that. Then if you go for purchase and consumptions of commodity transactions, etc., transportation, anything you do, any other kind of activity, you also tax. You also being taxed. So these are the classification which I said earlier, that the direct and indirect taxes. So in India we have this direct tax and an indirect tax, where the proportion of indirect tax is greater than the proportion of direct tax. Whereas in many countries elsewhere, like most of the developed OECD countries, the direct tax is almost equal or sometimes even greater than the indirect taxes. So it has always been said that the direct tax, the amount of direct tax which determines the progressiveness of the nation. But I'm not a person saying that that is the so whole or sole principle we have to rely on. But if indirect tax also there, then indirect tax has its own merit as well as demerit. The demerit we will discuss later, but as a point, I would like to make that it is having a regressive effect, because the regressiveness is that it treats everyone equally. So whether you have high income or low income doesn't matter. If you buy a commodity, you have to pay tax. That tax is fixed. For a wealthier person, that may be very cheap option, but for a poor person, that is very dear option. So these are the kinds of understanding which we will discuss in the coming. So now, if you have direct and indirect tax, then you have a proportion of tax rate which may be imposed upon. So that determines the base tax base. That is the measure of value on which a tax is levied. Okay. For example, all income after deduction above X amount, okay, is taxable. For example, if you are in India, you have tax slabs. What you call this is what is called the tax slabs. In India, if you have more than 5 lakh rupees as your annual income, then you are comes under the category of a taxable proportion. So our tax base is in that sense is very low, like 5 lakh above. If your country is running by most of the people, which is income poor farmers, 60% or 70%, definitely your taxable income would be less than that. Now that is there is no surprise that 16% or 15% or roughly 15% is actually the tax base of India comes with no surprise. Why? Because those people who has an income which is reportable income which is above 5 lakhs is very less. All right. Now, if again we may be having wondering, we may be have wonders in this case also. That is, uh, you know, but given the per capita income of the people, there is again no surprise in this case because our per capita income in an absolute term it is less than $500, but in a relative terms it is around 3,000 or less than 3,000 USD PPP. So in that sense again taxable sizable amount of taxable people is limited in the country, or you say that actually the number of people who are comes under the taxable and tax net or tax base is limited here. So in our case is actually the direct tax. If I would like to say that the first point I made is based on the direct tax. Above 5 lakhs means above 5 lakh means it is actually an direct tax. Okay, if your income is above 5 lakhs, then there is a deduction which is called the direct deduction from your income. So if it is, then you have different slabs. Like if you have 10 lakhs, then you have to pay this much. Then you have 20 lakhs, then you have to pay another amount. So you have different slabs: 5%, 10%, 20%, etc. So or now you have 5 and 20 or 50. Now there is a lot of changes happening. So let's see that what are the changes which we have. Now there are many countries across the world where people have a tax base and a direct tax deduction from a very lower income category onwards. For example, even 1 lakh onwards or 2 lakh onwards, you can tax, because if you feel that the government's existence is very important, then you have to rationalize, but the rate of taxation would be less for the lower income group, at the same time high for the higher income group. So this is what is called the progressive tax. Okay, so it is based on income rationalization. Okay, so the value of our home, that is for example, if I'm talking about property like real estate or our realty or house, etc., then we assess the value of the house, and then we will every year we reassess the value and put a small amount as tax, because you are holding that asset. Okay, for that you have to pay a tax. So this is what is called property tax. Okay, so in US it is called real estate tax. So again, for example, if you have automobile, you have to pay tax. Okay, road tax. This is called the road tax. Okay, so there are different. If your car is a luxurious one, if it is, it again that is applicable. If it is a low-end car like basic cars, then you have to pay very smaller amount. But if your car's luxury increases or the price of the car goes up, then the amount of tax also increases. Okay, automobile taxes, etc. So there are variety of taxes in that sense is already applicable in the real world, and through this taxation, the government earns their income. Okay, that portion we have already discussed, and expenditure portion we have already discussed. So now, as an economist, what would be the point? So we believe that efficiency should be the key factor which we have to consider apart from the equity or fairness principle of levying a tax. Okay, so our understanding is that the goal of economic efficiency is the basic thing, and the benefit received principle and the ability to pay principle. So there are three kind of uh, principles which is already accepted in the economic understanding, that is economic efficiency, that is the first principle, then the benefit received principle, then the ability to pay principle, then the fourth one is actually the horizontal and vertical equity principle. Okay, whether the tax is based on equity. Okay, then, as I said earlier, then there is also the nature of tax or leading what where the tax leading to this question. That is what is actually discussed under the progressive versus regressive tax concept. Okay, so these are the kind of principles somebody can note when they speak about taxation. So whether the economic efficiency question is attainable or discussed, whether that is dealing with the benefit or the cost, etc., cost benefit analysis, whether it is also considers the ability of the payer, then all kinds of this horizontal and vertical equity, and the result like the progressive and regressive kind of understanding. So these five principles are five different aspects, I would say five different aspects need to be considered. That culminates to this social objective of any tax, because tax is not individual action, in fact it is a social action, because you tax in order to manage not a person but the society as a whole. So that is what is actually the underlying principle behind tax. Now let us take some question, okay, before coming to the efficiency, economic efficiency. Do I need to stop or and collect some question and proceed, or let me continue with the lecture? Hello, excuse me.
Sir,
Yes. Do I need to continue the lecture or take some question and then proceed?
sir, continue ചെയ്യാം.
All right. So let me come to the aspect one by one. Taxes and economic efficiency. So tax is efficient if it imposes a small excess burden relative to the tax revenue traces. So burden of tax is part and parcel of the very tax itself. So there is nothing wrong with actually tax, as we said in the beginning. That if you want to have a government, you need income. So if you need income, then you have to tax people. Okay, otherwise, from where the money comes? Only people has to pay. So this is comes with the question of burden of tax. Who is going to bear the burden? Ultimately, there is no doubt that it is the people who are going to, you know, keep the burden. So, what would be the nature of burden? What is the extent of the burden? This is what is this question largely addresses. So definitely there would be burden. So there is no problem of burden. Now, whether the burden is excessive or smaller or no, so the no question never arises, because when you have tax, definitely people have burden. But now only what is actually our option? Minimizing the burden. So this is what is actually this particular concept. The tax is efficient if it imposes a small excess burden. small excess relative to the tax revenue it raises. Now, excess burden is efficiency loss to the economy that results from a tax causing a reduction in the quantity of the good produced. This is what is called the excess burden. So, excess burden is efficiency loss to the economy that results from a tax causing a reduction in the quantity of a good produce. Now, you have actually high taxes discourage the start of a new business. Do you think that the tax discourage so in order to start a new startup, government himself offers that there is a tax exemption. So that means people think that if there is a tax, then the tendency of you being part of the entrepreneurial class is minimal. So if that is the empirical thing, then the government try to say that okay, no tax for X and Y kind of enterprises. Okay, so is that rationalizable? That is question number one. So do high tax encourage people to leave the formal labor force? Again, people say that if you tax and all, people will actually quit the job, kind of stuff. Is that real? That is the second kind of question. That is, do high taxes encourage people to leave the formal labor force? Again, do high taxes alter incentives to work, save, or invest? Any of this thing. Whether the tax has any sort of incentive to work or save or invest or leave. So these are the kind of thing, that is whether the tax, in a nutshell, what I would like to speak is whether tax act as an incentive or a disincentive to the taxpayers. This is what is we are trying to understand through the principle of efficiency. Okay. A tax that is neutral with respect to economic decision is preferable to one that distorts economic decision. Okay. So, what is actually the panacea or the economic kind of solution is that you should not distort people's economic decisions through your taxation. So, what they try minimum tax. Okay, if you minimize the tax, then people have more money with them to invest, etc. So there are a lot of other schools which operate simultaneously this or behind this particular statement. That is, a tax that is neutral with respect to economic decision is preferable to one that distorts economic decision. Okay, we will see that for different countries this neutrality of tax is different. Empirically, there is a lot of dispute over a single tax in the same country. So it is not that easy as we think that to find the neutrality of tax. Okay, but theoretically it is possible. Okay, that is what we are going to see in the. So tax efficient and tax burden. We begin with a common supply demand curve. Okay. So a downward sloping demand and a upward sloping supply. Your quantity you demanded is equal to quantity supply, which determines the level of price. So price without tax. Okay. Now, if you this is what is called the price without tax principle. Now, if you are going to introduce a tax, then definitely that is going to introduce a price hike. Okay, so that definitely going to have an effect in this equilibrium. So if I am going to talk about an equilibrium which is T dash or T, then I am going to introduce a tax. Definitely the new equilibrium would be not T. Definitely it cannot be. It will be a T dash. Okay, that T dash can be either progressive or regressive or efficient or inefficient. We don't know. But when you compare that with the no tax situation, definitely, as we said, if you impose a tax, definitely it comes with a burden. So that burden is also equally say that there is also possibility of welfare benefit. But if you don't see that benefit, then you can't simply analyze why we are having a tax. So when I am imposing a tax, definitely it is having another effect which we would like to see it doesn't exist. Then we can't do anything in this case. But at the same time, if we see that the cost and benefit should be assessed. Now the cost and benefit statement, it is all inclusive. All kinds of cost and all kinds of benefit you accrue out of this particular thing. That all has to comes under the tax. Then only you can say that a complete analysis. Otherwise, there is no complete analysis. So these are the things which we have to keep in mind. Now let's introduce a tax. As I said, we know that the first Q1 is what is called the price without tax. When we include the tax on the item, the supply curve shifts left and the price increases. So this is what is the standard understanding. When there is a uh, tax introduced, then S shifts towards the left. Why? Why? Simple, because the price is actually increased. Now it is not the S is actually completely shifting. It is because the other portion of the commodity they cannot sell because a higher income group can only now afford. So that kind of that much of a portion of commodity is only sold in the market, which is at a higher price. Okay, so that is why it shifts. Okay, it is only a point shift. It is not necessarily the entire curve shifts. Okay, the point shifts because that amount of that range of people can only now buy because the price has gone up. Because of a higher price, that kind of a people can only buy. So there is a shrink in the total quantity. Okay, so this is what is actually the first one, and the price which is D. This is called the consumer surplus. Now this surplus is actually if shift means there is a loss in that sense. Okay, now you have 2 point price with tax and price without tax. Okay, okay. So with the new higher price and the low quantity demanded, we see that producers are producing less and receiving a low price. Therefore, high tax lead to low production. So this is a simple conclusion in a sport understanding. That is, everything take place simultaneously. Then there is an increase means tax increasing means quantity of production will fall. The question, real question, is that true? That's an empirical question. If it is a closed economy, there is no other option. This is right, completely right. If it is a closed economy and everything happens simultaneously, like a flick or your or of your finger, that's it. Okay, everything take place. But in the real world, things are not like this. If that is the case, then this entire understanding would have a little bit tweaking. Okay, so that is what we are going to discuss later, not now. So the first principle I said, that if there is an introduction of a tax, then definitely there is an inefficiency. That is, production is going to fall. This is where you have to keep in mind that you have to minimize the burden. That means you have to reduce the shrinking of quantity, production. Okay, quantity or production. So that is why you can say that okay, you minimizes the inefficiency. If you massively cut because of your high tax rate, then that kind of a tax is actually evidently say inefficient or it is if inefficient. Okay, so let's go to the second principle that is called benefit receipt principle. A theory of fairness holding that taxpayers should contribute to government in the form of tax in proportion to the benefit that they receive from public expenditure. This is again in the textbook. Okay. Example: toll roads and bridges, Federal Highway Trust Fund, landing fees at an airport, etc. So this is all about the fairness. The tax side and the expenditure sides are connected in that sense. Okay, so you always take into account of the benefit as well as the cost involved. Now the problem is, how does society pay for public goods in that sense? If it is privately understood, things are okay. But what about the public good? I'll come to that point later. We have already seen that kind of issues when we talked about the public good issues. But still, I'll come back. And the third principle is called the ability to pay principle. A theory of taxation that holds that citizens should bear tax burden in line with their ability to pay. Okay, so the ability, as earlier Smith said, if you are able to pay only lesser amount, then a good taxing or a good agency of taxation should fix accordingly. Otherwise, that is going to have a very regressive effect. A tax side and the expenditure side are viewed separately in this case. Okay, so regressive tax is actually a tax whose burden expressed as a percentage of income fall as income increases. For example, retail sales tax. As I said, now we had moved towards the GST. So the very beginning itself, I said as an the indirect tax system. If we rely more on GST, like country like India, where you have a large number of poor people resides, then actually we are having a regressive tax. We depend on a regressive tax because GST never treat that whether the able person or the unable, the ability of a person distinctively. GST say that if you commodity, that is commodity specific. If you buy that commodity, then you comes to that category. Whether you are rich or poor doesn't matter. Okay, whether your ability doesn't matter, whether you are able or not doesn't matter. So all this is what is actually comes under the regressive thing. So the effect is literally not a progressive one. So that is why retail sales tax or VAT or GST, whatever we speak, is comes into the category of a regressive sales tax, a regressive tax or sales tax are regressive. Whereas a progressive tax is a tax whose burden expressed as a percentage of income increases as income increases. For example, individual income tax, as I said earlier, that is the 10%, 5%, 15%, 20%, 30%, 40%, whatever. When your income increases, you proportionately increases the slabs. Okay, slabs of payment. So if that is the case, then definitely this is actually a progressive one. So that is comes under the progressive taxes. Now you have also um, proportional tax, a tax whose burden is the same proportion of income for all households. For example, flat tax. For example, so it's flat for everyone. So again, horizontal equity versus the vertical equity. So the horizontal equity is the principle of horizontal equity holds that those with equal ability to pay should bear equal tax burden. So this is what is called the horizontal equity. Whereas vertical equity says the principle of vertical equity holds that those with greater ability to pay should pay more. So, if you have higher ability or if you are richer, then you have to pay more. This is what is called the vertical equity. Uh, Whereas the horizontal equity, if you belongs to the same category, you all has to pay the same amount. Okay. So, for example, a sleeper class traveler, whether that sleeper class traveler is rich or poor, they all has to pay the same amount, which is called the horizontal. That is actually fixed for that particular class. Okay. Whereas if you are seeing the same, treating the same thing in a progressive income tax, if your income increases, no, then you have to basically, you may be belongs to the same caste or class, but if your income is actually the category, increased income comes with a higher rate of tax. So this is what is called the vertical equity. Now, what is, as I said, if you are okay with all this five category of tax, then what is the social good and taxation? There are citizens who believe that one of the legitimate purpose of tax system is to promote social good. And I have no doubt that my student basically subscribe this view, because in the very first class we asked the same question, that why do we need government? So all of you said that we need government. So once you subscribe that fact that we need government, then the characteristics of government is the next door a different question. But once you say all of, or that once you agree that we need a government, then definitely we subscribe the fact that the government is for people. Okay. Then it is also rationalized that they need an income. That income comes in the form of taxation. Okay. So there are citizens who believe that one of the legitimate purpose of tax system is to promote social good. Therefore, whatever being taxed has to spend for the benefit of the people or the society. So the social goal, therefore, is categorically given, and the distribution of income, therefore, comes the next part of the story. Okay, for social promotion of the social goal, that is definitely, it is good for the society. Now, within that, good for the society means, like all of us, we know that actually the income of the poor has gone down in India, but at the same time, income of the rich has gone very, very sharply higher in the last couple of years. Not couple of, in the last decades, few decades. So if that is the case, then definitely we have to see that what happens to the distribution of income. Okay. So the distributive justice comes there, not actually the society's goal as a whole. And in that sense, if the per capita income of the country is going up, then without further doubt, anybody can say that the country is actually progressing. But now the question is that who is progressing? That is actually a question, a sub question within that increased size of the economy. Now, this is what is called the redistribution of income, or a distributive justice. We talk about distributive justice. So, when I am saying that tax is being levied, then tax is actually a social action. Okay. So, it should be actually for the benefit of the society, not any particular individual or regressive to any particular individual. So this is where the government should be, the role of government is very carefully evaluated. John Maynard Keynes, Franco Modigliani, etc., they are all concerned of, or they are all basically worried about the distribution of income in that sense. Now, promote economic growth. If promotion of the economic growth is the goal, deduction of mortgage interest on income tax, reduction of for number of children on income tax, etc., are also being understood. Like again, social progress. There are many people say that okay, let's tax the liquor, but at the same time, or tax tobacco. At the same time, some people say that why should we treat liquor as something bad, or even cocaine, or all this kind of illegal. It's, in India we have all this commodity are illegal commodity. Okay, but there are countries where it is legally permissible. So again, in India, in Kerala particularly, liquor is having high tax. Okay, when you compare with any other states. So it is actually a large portion of the income comes, though large portion of income comes from this kind. We treat it as a sin. Okay, so this is what is called the sin tax. So there are different understanding as far as the society is concerned, as far as the government is concerned on how to pursue, how to you know introduce taxes. Okay, at the same time you can also introduce newer taxes when the circumstances changes. So these are actually the kind of check and balance which the government has to play with to in order to raise income, especially when we talk about the time of this pandemic. All the governments, irrespective of which country you are belongs to or which state you are belongs to, the total production of the state or country fallen very drastically. Now that means there is a clear regression in the or deduction in the growth aspiration, or what you say that the growth rate, okay, rate of growth or production front. You can say that there is a massive fall of production. Consumption side, there is a massive fall of consumption. Now it's natural, that is, it is actually twin side. That is, if you have a fall in production, naturally your income falls. So that will lead to a natural fall in consumption. So if on the contrary, if you have an expectation of fall in production, though you have an T0 period, you have some income, but you will not consume. So it will again push, on the contrary, a fall in production. So because you don't consume in this T1 period, therefore again it will have an effect on the production in T1 as well as T2, etc. So both has actually a counterproductive uh, role when we speak about fall. So in this time, it is quite clear that the countries, whichever country which we take, the total expected or the prediction is at least 2 trillion, 2 or 3 trillion. Is going to be less than, or there is a fall of 2 trillion or 3 trillion output in less than 6 months. So the fall is drastic. Okay, fall is definitely drastic. Now, uh, so now the government, all government has to rationalize their expenditure, rationalize their income. So they will be finding newer ways. Suppose if they cut the income of people, uh, keeping that actually your economy is under recession, then it's definitely again it is going to have a negative effect. Why? Then people's consumption, as I said earlier, the consumption will fall. If the consumption falls, then the production, again, it will push the production to come fall. So at the same time, if your income is less, then whatever things you produced already may not be sold in the market. Again, that will push the production fall. So in all aspect, this is going to have an effect in that sense. Uh, this is quite clear, at least in the current junction. So let's come to the next portion of the lecture, that is called the features of an income tax. So now, till now we talked about the general tax, both direct and indirect, or income and the consumption tax. Now let us talk about the features of income tax. So, we call it as direct tax. So, tax on income, a tax on flow, generally considered progressive. It also contains both horizontal and vertical inequity, an ability to pay tax, and generally considered to be anti-growth since taxpayers are taxed twice. So, this is what is called. Now, I'll come to that last point later. Let us It is pretty clear that the income tax is one of the best known tax. Why? Because it is based on income. If you have high income, then you are taxed high. Again, it is based on your flow of income. Okay, Every year it is being transferred. Every month, every amount which you receive is actually taxed. It is a flow tax. Again, it is also a progressive. Why? Because it is based on the higher the income category. That is it is based on propensity or income propensity, what I would call it. So again, you have a higher income, higher chance, then you have higher tax. Again, it is also in that sense all the kind of people treated either horizontally and vertically, because if you belongs to one category, then all that category people has to pay one type of tax. Okay, again, if your category changes, then you have to actually go for a higher or a lower tax. So that means it contains the element, it satisfies the element of horizontal and vertical equity. Again, the last one, the ability to pay. Again, if you are having higher income, then only you have to pay tax. Otherwise, you need not to pay tax. So generally considered to be anti-growth. So this is the point which people try to. Why it is anti-growth? It say that you are taxed at the source, and again there is a indirect tax. It's against it, but no country in the world uh, ever. I mean, this is it's a logical thing, because some portion of this is a theoretical, but some portion of your tax is actually taken. So that portion of the thing is actually not being consumed, but your income y, as per the macroeconomic understand, your y is equal to, in the last lecture I said, in the y is equal to c plus I plus g, where this g is what is called your t. G is government's expenditure is actually a function of income of government. That income of government depends on T. So that T is what is here. That means the government is going to spend on it. Okay? So government expenditure is some or the other way government spends. For example, if government gets a tax, they're paying for all their public servants. Okay? So they are spending on behalf of the government in that sense. They consume as well as their tax again being deducted in the source or at the source. So this is actually a theoretical statement. It's based on a closed model, but from a flow point of view, I don't think that this is actually having that much of an effect as people try to, create a panic. So I don't support it. But anyway, that view is already prevalent. That is generally considered to be anti-growth, since taxpayers are taxed twice. Again, they are going to spend their money in the consumption consumables, then they are going to pay again. So twice they are paying, or not only twice, many times. But that is being part of the story. Okay. So the federal tax, again, I would say that the consumption, you need a consumer code to protect your consumer's interest. So for that, you are paying a consumer tax. Okay. Again, you are also paying property tax basically to protect your property. So every tax is having its own purpose. Okay. That purpose is most important as far as tax is concerned. If that purpose is served, then I think it is too liberal to criticize or question this kind of understanding. So there are different kinds of taxes. Like in US, you have a federal tax. Then specifically states like Missouri is having different tax than city of St. Louis, which is a county having a proportional tax. So in US federal system, you have different tax, but in India, you have the say, union tax, you have state tax, okay, and your local bodies tax, okay. So same. So you have a decentralized tax as well as a centralized tax. Certain tax only the state can tax. Certain provisions of tax only the center can tax. But certain tax they can both tax, okay. But certain can actually be given to the local body. So this kind of taxes is already there in the thing. Now, as far as the taxable income is concerned, there are different. This is a statistics of the United States. Okay, so the marginal tax rate in 2005 rates at a single taxpayer in United States is almost 88%. Okay, that is this is actually based on their income slab. 10% if you are below 550,000 USD. Then if your income goes up, okay, then you are paying higher and higher tax. Okay. 40% is actually almost 38, 39%. 40%, yeah, almost 39% is actually the tax of the people who has an annual income above uh, 3 point 3.25 lakhs. Okay, so they have to pay this much of it. That means at least six tax slabs are there in the United States. In India, we do also have different tax slabs. Okay, I said already that is we have a 5% tax slab. Earlier it was 10, 20, uh, 30 plus then the additional amount if you are above certain level of a certain amount of income. Then now in the last, because of the package stimulus package, there is a revision in the tax in the Indian context. You have a 5%, 10%, 15%. Then there are a couple of revisions again, 20, then 30%. Okay, there is a little revisions taken place. But before that, this 10% was removed to 5%. Okay, I think it was the last Jaitley's budget, last budget of Jaitley, he removed that thing. But that was been revised and changed with Nirmala Sitharaman's stimulus budget. Okay, so there are changes in these tax slabs in India also. But there are countries in the European countries. There are country in Europe. There are countries with more than 10 slabs or 20, 15 slabs. Okay, of different income category, and they tax heavily this income. Especially in the Scandinavian country, their average tax is about 50% as income tax. Okay. In US also, your income tax is almost 40%. Okay, but in India, as we know that we are notoriously less, our contribution of the direct taxes as less as any other poorer nation in the world. So that's about the average tax rate. Again, this is the average tax rate. Now, features of real estate tax, I don't want to because this is about the United States case. Let me skip. Okay. Now, in the Ghanesian case, this is what is actually in the United States. It's been practiced. So, tax rates increases when tax receipts also goes up. Okay, when your country's income increases, then again progressively you tax, then income definitely going to. But in India, there is a lot of refrainment these days from taxing the rich. There is a lot of exemptions being given to the rich. At the same time, the lower middle class again being heavily taxed, and their consumables are more heavily taxed than. So I think we need to be worried. But at the same time, when you talk about laughter rate of receipt, your tax receipt will fall after a point when you increase your income. Okay. Whereas Keynes said that is not going to happen. Okay. In the United States, as I said, their receipt shows exactly what Keynes said, not Laffer said. So this is actually what the rate and their income never fallen in that context. So this sort of an increased tax which leads to reduced receipt. I think we need to really look into the empirics. I'm not sure because at least the studied results are not actually giving exactly what this curve says. Maybe there is a fall, but not exactly like this.